All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and today is Friday, January 31st. So the end of the month concludes, goes out with a nasty looking day. The Fridays in so far in 2020 have been ridiculously bad. I do one of these videos just about every Friday, unless I'm traveling or something like that. And they just end up the last three Fridays, right? Have been nasty. There's been something going on, it seems like going into the weekend, just about every weekend that is adding to the drama a little bit. So, for example, Friday, obviously this was the performance for today. The Friday before that, so we've had a couple of these that just basically have not been good. Around the weekends, traders just don't want to hold cash. Remember, a couple of weeks ago, it was worries with global tensions with Iran, and now it's the virus update and so forth. So I've got a couple things to say to kind of help. I'll give you my perspective. On the price action, and hopefully I can help a little bit. Um, I'll tell you, as January concludes, I managed to really, my portfolio, both short term and the tactical portfolio, I think did pretty well. Finished, should be up around, I won't have the exact numbers tomorrow, but I'm up about 25% year to date. I really played a lot of defense the last couple weeks, especially, a couple things, and these are all things that members know, but if you're not a member of the Tribeca Trade Group, then I can kind of fill you in. The last couple of weeks, I've been saying basically not knowing what was going to happen with this virus, but my perspective is always earnings season. I think is very difficult. It's highly unpredictable. I think even, for example, last night, Amazon, great quarter. Really excellent price action after hours. You would think that you would come in today and that the market would be up. Nope, it's the exact opposite. So that's just mainly what I've learned through my experience is that these earning seasons are extremely tricky. Every single one. Maybe last quarter was probably the easiest one because there was such a nice bid in the market. But I generally and I really try to not only say it but actually act on it and really try to take less risk. Some of the things that help me, and again, I'm not trying to brag or anything like that, but these are all exercises that need to be done in your short-term account. Long-term account, it's a little bit different, and depending on your time frame. But short-term account, I mentioned several times I took money out of my trading account. Once we were doing this. So again, I gave back a little bit of profits from the peak of where I was this month, but for the most part, taking money out of your trading account when things just get stretched and into earning season was played pretty well. Uh, and again, like I said, I'm caught in a couple of trades. I put on a little bit of Procter and Gamble today. That didn't work. This week overall, though, a lot of plays that we were doing, cyber plays and software plays worked really well, and I was trading a lot more stock doing that. Right, that's another adjustment that I made with this market was trade less options. Once we lose the momentum like this, and we're in a choppy situation, right? My view on trading options, like swing trading options, day trading is a little bit different. Day trading, you want volatility. Swing trading, you kind of don't. You want to have these nice swings. So options when we're trending are great. Options, swing trading options when we're in a choppy market is extremely difficult. And I don't know many people that can make money swing trading options when you're in a choppy market. It's just you're just going against the tide. So those are and that's why basically everything 90% of what I did this week, maybe 90%, I don't know, maybe 80% was trade stock, no option, hardly any options. I did one trade. The two trades that I put on, which were the Procter today and a little bit of Marvell, which again, small position size. That was another big thing. If you're going to trade during earnings season, which I think is difficult, the position size is important. You got to reduce the position size. So this was our video last week. If I can find it. These were some of the things that I was saying. I actually left this bullet in here for the last couple weeks about being mindful and careful around earnings season. We talked about the city euphoria. What's it called? The panic euphoria model, which is much better than the fear and greed index. That is given a wonderful signal the last two times it hit euphoria, right? And we modeled that out in last week's video, and I think the weekend before that, where I talked about the last time it hit euphoria, the market was basically down for a month. So that's where we are right now, and so I'll tell you again because I like when we've gone through something and that model really works. So again, be very mindful. That's the model. If you're not familiar, it comes out in Barron's every weekend. So they only update it once a week. It hit euphoria 2 weeks in a row, and these are things where you make adjustments when you see things like that, in my opinion. By the way, everything that we're going over is information purposes only. I'm not giving out any advice or recommendation, but yeah, so I know that's very difficult, right? I'm managing a trading room, and I know everybody comes in and their goal is to make money. But these situations, the last couple of weeks, it's defense and managing your risk are paramount. So where does that leave us, right? So that's kind of a little bit of a recap. The tactical portfolio too, which I sent out a late day, midday member video, but I'm very pleased going into cash like we did. I didn't put the whole thing in cash, but this thing is now beating the performance of the S&P. So, and again, anybody can invest in this. They just have to be a member. But it's all the performance is tracked through Motif, so it's completely independent of me providing the numbers. You could go to the website and you could figure out how we're doing in this one portfolio. So completely transparent. All right. And again, I would have liked, here's what this portfolio looks like. I don't mind sharing the positions because I'm going to change everything next week. But this is what I basically did by going into cash. You could see there's a couple things international that, basically has went from a winner to a loser, which is unfortunately the situation. But I did add in Amazon a couple weeks back, and that was a nice winner for me today. We also had an option trade on in Amazon as well, so pretty good, pretty good. So where does that leave us? Right now that I'm 8 minutes through the video, let's talk about the performance first. That was the first thing that I showed. Yeah, a nasty week, right? In the second week, for small caps, they also gave a little bit of a signal. Copper gave a signal, a week ago. Copper's was down 13 days in a row. Very oversold at this point. Emerging markets, and copper's has a higher correlation to emerging markets. I think that really confirmed what you saw this week, down 5.6%. That's a huge move. Look at what's going on with steel. The semi names, we talked about that a couple times this week. I sent that out on Twitter twice this week, talking about how the semis are breaking. They started to show cracks in the middle of the week, and now you've basically broken below the 50-day moving average. So it's one of these situations right now in some groups that what has gone up and has been in a beautiful trend for months and months is now starting to really break down. My thoughts on, and again, I think a lot of this has to do with China, shutting down, as well as the fears of contagion across the globe. So my thought on this, there's a couple points that I've got my own perspective. Of course, I'm not a health official, or that's it's not my area of expertise to know how viruses spread and so forth. But the fact that I see like a lot of comparisons on Twitter. I think Twitter is like a really tough place right now because of all these views. But like comparing like epidemics to 1918 and different years, I think those are not very good comparisons because we can do things much more efficient than we could do then, right? Part of the like one of the comparison I heard between like an outbreak in 1918, they're like, oh my god, well, people travel a lot more now. Yes, that's correct, than they did in 1918 and can get around the globe easier. But we can also manage things and communicate things. Our technology is much better. So these preventative things that are taking place, these are good things that they're doing. Now, it's going to cause a short-term volatility in the market because when you shut down businesses, they don't have any output, they don't have any sales, they don't have any profits. So, but I think it's more. I hate to use this analogy, but I think you have to take the medicine now in terms of like locking things up and being on the conservative side with travel and so forth, to make sure that you stop the contagion. So again, I think those comparisons are not good comparisons from years ago because we're being much more proactive. Whether or not you want to agree with this or the conspiracy theories out there, but I do think it sounds like China's being much better with trying to control this than with SARS. And China is a completely different type of country when that was going on. So now, does it mean that they've gotten ahead of it as well as they could have? Who knows, right? And what they can do at this point. But it does sound like they're at least doing their. It sounds like they're doing their best. So that's what it is, right? And we don't know. I'm not going to compare this to the flu and so forth because like I said, I'm not a medical expert, so I don't know all these different things that go on with that. So what I do know is is what the market is telling us right now. So I always go to what do we know, right? So all week, even when we had these bounces this week, the VIX never really got back under 15. So the VIX is telling you right now that volatility is higher than it was. So that means it's a whole different game of trading options. I'm not going to get into that because I'll talk for 15 minutes about how it's different trading options in a high volatility environment. But that's why personally I'm trading stock more. Stock you don't have to worry about. If the VIX does go down by chance from where it is now 18 to 14, you're going to have vol crush in all of your options. So you're swimming against the tide. You could still make money if you're biased, let's say long in an option, and the VIX comes down, but you're going to basically the price is going to be, you're going to be basically, like I said, swimming against the tide with a vol crush, because volatility is one of the components that goes into option price. So you have to make adjustments right now. But first and foremost, the VIX at 18, 19, 20 is telling you that there's a higher level of volatility that is taking place right now in the market. And we know, right, and you could see, if we go back to this S&P chart, remember, volume, which everybody got was, I don't want to say everybody, but there's a lot of people who are looking for volume. Volume happens on the turns of the market. Look at the volume the last week versus the move up, right? This is where volume happens. And price action really starts to accelerate to the downside. So from my experience, I've said that a couple times now, I've just learned to kind of, where I've made mistakes before, I like to share mistakes. Sometimes you see red and you're like, oh, geez, I haven't seen a dip in a long time. I want to buy. The mistakes that I've made in the past are buying on too early. You have to let this play out, and you have to wait for some confirmation. And we don't have any right now. I don't see any confirmation that this is over. And I said that in a couple days ago, and we bounced one day, and I kind of felt a little bit stupid. But I think that was on what day was that? We closed on the absolute lows. I think it was it Monday? And then of course we bounced on Tuesday. Yeah. So, but I still think the same thing. We don't really have any confirmation. Market breadth has been only, I think, besides Tuesday when it was consistently green all day long. But this market breadth is telling you a sign as well, right? This was negative all day long. It didn't really budge. It got worse over the day, right? So that's confirming that the move is down right now. What we want to be able to see at this point is a bullish divergence, something that looks different while the market is going down. Right now, everything is kind of confirming that the short-term trend is chopped to down. Like I said, the VIX. One thing that's on the bright side is the put-call ratio is starting to perk up. Right, we want to see that get extreme. I don't think it got extreme yet. It's close. It went over 1 today. So again, that's usually a contrarian indicator, right? Just like when the put call ratio goes the other way, when everybody's buying calls, that could also be a contrarian indicator. But when everybody's buying puts, it's one of those boxes that needs to be checked whenever you're going through some time of volatility. Also, if you want to go another layer deep in the VIX, when you have backwardation versus contango, that's usually you want to wait until that flips, until it goes back to contango, meaning that further out months in the VIX futures are more expensive than short term, right? We don't have that yet. This weekend, what I plan to do for members, I'll be going through charts and so forth, but I really think it's going to take a couple days, unless there's some announcement that the virus has stopped, new cases have stopped at the increasing rate that they're being reported. That we are right now we are in a very headline market. So unless that changes, I think you have to kind of continue to do this process of being mindful of your risk. And I will tell you also the option activity is very much two-way. There's a lot of puts, like with that put call ratio, that should just sum it up for you that there's a lot more put buying than usual going on. But that's going on in the indices. It's also going on in single stocks. Now there's also call buying too. That's going on, which makes it very noisy. So I think you can't really. There's not too many signals that you can get right now from option activity, other than what we're seeing on the tape is that it's two-way. There's a lot of put buying, and there's a little bit of call buying, but I think that also has to change as well. One other point. So yeah, and I can go through. We talked about commodities already. I don't want to rehash that whole thing, but I mean, this and copper. So this is telling me that this is this is going to take a little while for this to work out. This copper now down 13 days in a row. The Baltic Dry Index, I've been looking at that too. The last couple days, this obviously this was a negative that you got as well. And we went over this, I think, in the room. I think I did this in last week's video, as a matter of fact. But this is the Baltic Dry Index. This is also, looking pretty ugly from where this was. This thing peaked out in September. So that's the story. Monday is the first day of the month. Typically, there's new money that's put to work. So we'll see if that's the case. I'm a little skeptical that there's going to be new money put to work. Remember also one of the things that we talked about in one of the videos this week, the Bank of America Fund Manager Survey, which comes out once a month. Cash levels are very low. So there's no one to buy the dip right now because there's no cash on the sidelines. Right? I forget, it's a multi-year low in terms of cash balances. So so what is this all adding up to? Control what you can control, of course, right? You can control your risk, and let this play out a bit. Another saying that I say a lot of times is I do not want to be the first one to come in and buy the dip. Let it play out. My guess is that, and again, I change my mind very frequently as the market changes, right? But I think it'll probably take a couple days before we'll start to see setups, because I think the thing to get excited about is that if you missed part of this market run and you've got cash on the sidelines, uh, or if you took profits like we did in the room, and moved money and took money out of your trading account, the next couple weeks after once we get through earnings season are probably going to there's going to be a lot of opportunities. All right, there's going to be a lot of names, but you have to be patient and let the setups come to you, rather than just buying on a big red day. So I think it'll be exciting the next couple of weeks, because again, as I said in the midday video, I am optimistic that this eventually works its way through, but you just have to be patient and not get you know not get too damaged in your P&L while it's developing. All right, guys. So that is it for the weekend. I look forward to seeing you in the trading room. Again, I think in these markets, providing as much guidance as I have been, I hope that helps and has saved some traders some money the last couple weeks by not getting too involved in this. So again, that's my goal, and check us out if you're not a member. And trust me, when there's times to be more aggressive, I will be more aggressive. All right, guys, have a great weekend, and I'll see you on Monday.